Thanks, Sammy. Tying the looking forward segment to our last week's review of the week question, do you think the government should keep spending? I think inflation is our main concern as we're trying to overcome so much these days. Well, Congress has passed trillions of dollars in stimulus funds with more likely on the way. Usually an infusion of cash this large into the financial system has concerns of inflation, so we keep a close eye on it. Our economic projections for this week, well, the Fed looks like they're most comfortable with a 0 to a quarter rate holding. And the FOMC, the Federal Open Market Committee, is coming out today, the report, and many investors expect the U.S. inflation forecast to stay below the 2% for the next 3 years. A more important part of the report is the breakdown of individual members' interest rate forecast. In theory, to stimulate an economy, the Fed lowers their target rate, and if interest rates are low, the presumption is that customers can borrow more and consequently spend more, and this should keep us afloat. The FOMC vote to change policy would result in either buying or selling U.S. government securities in the open market to promote the growth of our economy. This week's quarterly earnings report to look forward to are Nike, AutoZone, and General Mills, all of which stocks have been down this last week, but Nike has still been rated as a buy, while General Mills is expected to show profits as their at-home eating is the new norm. U.S. economic data releases will also include August industrial production numbers, last month retail sales, September consumer sentiment gauge. On our economic data report, so much is happening. The Energy Information Administration is going to release crude oil inventories measures this week. The level of inventory influences the price of petroleum products, which can have an impact on inflation. Higher inventories means less demand, and with the end of the peak of our U.S. driving season, this is the second week in a row that crude oil prices have been dropping, but inventories have beat forecasts, so investors are concerned about fuel demand going forward. Monthly retail sale numbers are coming out today, and they measure the change in the total value of sales at the retail level. This is a key indicator of consumer spending, which account for the majority of the overall economic activity. Though retail sales figures have been super volatile since April, a higher than 1% figure should be taken as positive or bullish for the US dollar, so anything less should be reflected negatively in the forex markets of the currency pairs. The US housing market is a key indicator of overall economic strength, and we'll hear about the building permits for August on Thursday, as well as existing home sales on Tuesday. These measure the change in the number of existing residential buildings that were sold during the previous month. Anything higher than 6 million should be taken as a positive or bullish for the economy and the US dollar. Tomorrow, jobless claims, which are the individual who filed unemployment insurance for the first time during the past week, is coming up. The week wasn't great, and unless we can blame something or somebody, anything under the forecasted 850,000 new jobless claims will indicate that the labor market recovery from the COVID-19 pandemic is stalling.